Hey there, Everett Dirksen here, joined by Brian Mahachik from EJD Mahachik. Brian, good to have you. We are going to talk today about some of the CEBA loan stuff. I know you've been spending a lot of time in there, and so we're going to look through what it looks like. I got an email from my bank, Brian, and they said, hey, your CEBA loan is through. We're going to show people what that looks like and what it means to them. And then you've got a nice surprise for us at the end that everybody's going to be super interested in. So we're going to save that for the last little bit. But before we start and get into the email itself, can you tell us, Brian, what's an update with CEBA right now?
Yeah, just I guess it's not hot off the presses, but it was a little bit ago where new finance minister Krista Freeland came and extended the CEBA to the end of this month.
Right.
So if you haven't applied for it and you want to, or you've got the ability to, you've still got about a month left.
So the end of October, right?
Yes. Yeah.
Okay. Awesome.
Yeah, and there's really the two streams that are available to apply under. The first stream is what they call the payroll stream, and that stream is based on 2019 payroll. If you had in excess of $20,000 of payroll per year on your 2019 T4 summary.
Yep.
The second stream is the non-deferrable operating expense stream, and that doesn't require payroll. Payroll can still get in there, but it doesn't require payroll necessarily. But you've got to have at least $40,000 of these non-deferrable expenses in place. And if you go that route, you're going to have to produce those documentary evidence to the CRA in order to get that get approved for your loan.
I think that's the biggest piece, right? The payroll stream, you got to provide nothing.
You basically just provide your payroll per your 2019 T4 summary and the number, and you give your business number and hit send, and it's done. But the second stream is you're physically producing evidence to support these expenses.
Yeah, so way more work to do on that one.
Yeah.
Cool. Okay, I know you can help people with that if they need it, but that's awesome. Let's get into looking at my email. So I'm going to share my screen with you here, and you won't be able to see me for a little while, which is probably great. Trust you can look at that, and let's just walk through this. So I applied for the CEBA loan through my one business, and I received this notification back from them, from the bank. And here's what it says. Here's a brief reminder, Everett, of how the CEBA loan works and what to expect. So they say before December 31st, no, 3 years from now, or 2022, right? I don't pay any interest this year or any of these years. I don't have to make any principal payments, no principal payments required. And I can repay the balance of it before then, and it will result in that forgiveness of the 10 grand, right?
Yeah.
So that's, a lot of people are interested in that. How do I get this 10 grand in particular? And we'll explore that a little bit more. So after that though, so after December 31st, let me scroll down. Any remaining balances now gets converted to a 3-year term loan. So basically, Brian, if I understand, maybe you can correct me, my bank is going to take that balance, say, okay, here's now a 3-year loan that you have for us, and you're going to pay us back in some sort of fashion, I guess, right?
Yeah, whatever's left on, so you might have maybe paid 20,000 back on the 40. The 20 would get converted to this term loan. Yeah.
Good point. Yeah. Okay, so whatever I haven't paid back, that's awesome. They've got a fixed rate, 5% per year, which is bad sometimes, isn't bad at other times, but it's fixed, so not a variable floating that we can tell right now.
Right.
And then really what it's saying is, hey, you don't actually have to pay us then until January of 2023 is when my term payments probably would start to happen, right?
Yeah.
At that point?
Yeah.
Okay, so at that time, they say, hey, you know what? By the end of 2025, you'll all be fully repaid when we set up this new loan. So I don't think, nothing crazy in there or fancy. It's a regular kind of facility that a bank has, right?
Yep.
Okay, let's move on. Then they say, okay, there's a statement of disclosure here that tells you what this looks like, and it suggests that I save it somewhere, so that's great. So I'm going to look in here and say, okay, this is how it looks like. So when I view my account online, I'm actually going to see a principal balance of 40K, so it's about 40 grand, but a payment amount of 46,000, which is going to be all that interest that's accruing as well, or not accruing, but is going to exist at that time. So interesting way that it's going to show up in my statement. I thought it was interesting anyway. And so they're just saying, hey, this balance reflects the full principal plus all the interest that will happen up to 2025, assuming I've, go into it, haven't paid off anything at all.
Right.
And at the 5% interest.
Yeah, that's, I think, the key, because it is interest free till the end of 2022.
Okay.
So this extra $6,000 is presumably it's the interest, the 5% interest on a $40,000 loan balance from Jan 1, 2023 through December 31, 2025.
Right. Okay. Yeah. Awesome. So you know what? If I go pay $15,000 in between then and now, that number is obviously, I'm not going to pay $6,000 of interest. It'll probably be less, but it will be reflected in my new balance at the time. Okay. That makes sense. Awesome. And then they say if I can have any questions. In this case, it's ATB in Alberta. And I'm going to look at that and I'm going to phone them and ask them if they have a question or if I have a question. So then this is what they say. Hey, you know what? The cost of credit is 0 if I pay it all off. The loan principal is $40,000 and my annual percentage rate is 0%, which is a great loan, I will admit. You don't find a lot of those out there.
No.
And then it just goes into a bit more of the details, kind of rehashes the same things again. My initial loan term expires December 2022, turns into a term loan. We're going to give you an amortization period. Interest is calculated at 0% right here. No payments for this term, so that's great. And then they get into the last part, the repayment, or prepayment, which you talked about. Hey, repaying this on or before the end of the term will result in them forgiving 25%.
Yeah.
So I don't know how it looks. I assume, Brian, do you know if I give them 30 before then, will they just knock off the other 10, or how does that part work?
Yeah.
Any idea?
That's good. I presume that's what's happening, but we don't. I haven't specifically heard how that's going to play out. I presume, yeah. I grind away at my loan. I got a $40,000 loan right now, and I start chipping away $5,000. I get that worked up to 30. December 31, 2022 rolls around. I've paid my 30, which is 75% of the 40.
Yeah.
25% is forgiven. That's how we understand it.
Okay, cool. All right, so then it turns into a 3-year term loan, and basically blah, 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 that's it. So if you got an email the same as me, if you had a loan with this bank in particular, they probably sent you one. I don't know if all the banks are doing the exact same thing, but I assume they're having some sort of communication that's similar across all of them. So if you have any questions about that, let us know. That's what it looks like. That's what it means. But the surprise is, and I think this is something that's going to catch people off guard and may catch some accountants off guard as well, Brian.
Yeah.
Tell me a little bit about this 10,000 forgivable.
So, yeah, when you're in tax, unfortunately, surprises don't generally go the good way. And in this case, it's the same thing. So there's loan forgiveness. So, in the tax world, there's rules that are called the debt forgiveness rules.
Okay.
And those rules basically, they're complicated, certainly when you really dig into them. But in a nutshell, what it is, it's like, Everett, if you loaned me money, and so I got a payable back to you on your on my balance sheet, and then you say, oh, forget it, I'm going to forgive you. You don't have to pay me. Well, that has tax consequences for me. The government and the Income Tax Act doesn't just say, oh, you just get to walk away scot-free.
Okay.
Assuming it was like a true bona fide loan and had all those parameters inside of it, I would have tax implications. So when this initially rolled out, when the CEBA initially rolled out and we saw debt forgiveness, people initially thought, well, myself included, that these debt forgiveness rules would kick in. But recently there's been talk and publications and things going out there with regards to alternative treatment on this. So again, the Income Tax Act has specific provisions built inside of it, one of which requires income inclusions whenever a government agency, a municipality, provides an inducement, which can include loan forgiveness.
Okay.
So what would happen in that case is that when the loan is received, which in this case, you got your 40,000 this year,
Yeah.
you got that $10,000 forgiven amount. I mean, you haven't repaid it yet, but the provision says, hey, you got the money, you received it, there's a portion that's forgivable. That 10,000 is income to you now, 2020. That debt forgiveness would have worked on 2022. These other rules are saying that it's actually income to you now. And you know what? Like right now, the government, the CRA has not made any commentary on this. The programs that are actually administering the CEBA and the rent have not said anything either as to what's going to happen. They've just said the forgiven portion. So we're in this situation right now where, you know, there's alternative ways to think about it, but there's legislation that certainly says forgivable loans from a government are considered income when received.
Yeah. Yeah.
And if I don't repay it, like, so we got this conundrum where it's like, is this income now? And if I take it now, but let's say I don't repay it actually by 2022, what happens then? I don't have a forgiven amount. That 10,000 isn't forgiven. So now what happens? Well, when I repay that 10,000 down the road, I'm actually going to get a deduction at that time. Yeah. We're in a position right now where I'm sure there's some people that might be looking to the debt forgiveness rules or whatever. And so the gist here being, you better be talking to your advisors to figure out what you're going to do. And awesome. The majority of people right now are saying it's income.
Yeah.
At least unless we hear differently from the CRA.
Yeah, and I know there's some pretty reputable tax groups that are saying, echoing what you're talking about here.
Yeah.
They've said, yep, this is taxable to you now. You got 10 grand, that's free. It's taxable now. Later on when you pay it, or when you don't have to pay it back, or you do pay it back or whatever, if it doesn't work out, you're going to get the deduction then. But I mean, that's a long ways away. We're talking 3 to 6 years.
Yeah.
2025 that we're over. So really good. So I guess, great point. Don't be surprised if your accountant says, hey, this is taxable money this year. But maybe make sure you ask the question, right? Figure out what's going to happen, because you're not going to want to forget and make a mess of it later on as well. So interesting, very interesting. Government gave us money and said, oh, hey, guess what? Also a part of it's probably taxable too. So an interesting way to go.
Again, it was the speed of what they were doing. I mean,
sure.
You do have to commend, certainly have to commend the government. They did roll out their programs quickly.
Yeah.
And now 6 months after COVID really started to kick in, all these questions are coming out about, well, what now, right?
Yeah.
Oh, it's going to be forgiven. And maybe we'll figure it out later. Well, now's the later.
Now's already later, right?
Yeah, exactly. So we're sitting here. Yeah, it's something that if you took the loan in 2020, you got to be thinking about it, and received it in a 2020 tax year. It's a question that you should be asking. How do I treat this? Is it going to be taxable to me this year?
Cool.
And in all likelihood, probably unless we hear different.
Sure. Okay, well, we'll keep everyone updated on that. Thanks, really appreciate your expertise in this area and the research that I know you do a lot of. That is very welcome, and I think helps out those who are watching this as well. So just a quick wrap up. We've gone through looking at how the CEBA loan works and showed you my email that I got from my bank to give you a bit of a better picture. Hopefully it clarifies some of those repayment things. I know there's been a lot of confusion about when's this due, how do I do it, that kind of stuff. So we walked through that, and we brought you a welcome surprise, or maybe not so welcome, which is understanding the taxable nature of this money that you got, which we don't want you to forget about. Keep that in mind. Depending on the tax rate you're at, that'll cost you a little bit of money this next year potentially. So any other comments, Brian?
No, I think, other than just if people got if they've got questions or they're about the loans or any of the other government programs, the wage subsidy or what have you, yeah, they just can reach us at our website or through social media or just the good old phone, 403-405-0034.
Cool. All right. Well, I appreciate your time today. Thanks, Brian, for being with me. Brian Mahachik, and I'm Everett. Hope you've enjoyed this and learned something new. So we'll see you next time.
Bye-bye.